Good afternoon, welcome to Market Wrap. This week we're going to talk about what's going on in the UK property market. Now, as a disclaimer, obviously I have got interest in it because I've been a property investor myself for well over 30 years and I've helped many clients over the years become property investors, and last year we invested 130 odd million into the UK in residential property, plus money elsewhere around the world. So certainly I've got a skin in the game and I am a bit biased on it. So I just don't want to take my opinion for what it is. I wanted to look at some of the other people in the marketplace and see what they're saying. Of course, they do also have potential for bias, but let's see what they say and see how we get on. According to the Zoopla report that came out this week, there's basically a number of sales agreed is going up by 12% or up by 12% year on year, which is good news because it means that there is more confidence coming into the market. Now, what is confidence? There's a report in the UK called the GfK report, which surveys people and looks at their positivity, and it was up from 19 to 21. It's only a 2-point rise, and I don't know what context it's at for 100 or what exactly, but it's a definite improvement in sentiment, and that's what we're seeing in the UK in general. PricewaterhouseCoopers did a survey as well, and they had a similar sort of reading. Not 5 out of 5 positive, but 4 out of 5 are positive. There's still negative stuff out there, and people are starting to cut back on their essentials to keep living. Cut back on their frivolousness to keep living. So the sentiment is positive, and we're seeing that in the marketplace. People are feeling more positive in the property world, and there are more people coming out and buying on the back of that. So that's a really important thing in the UK housing market, is that sentiment, and we're seeing it in the consumers as well. Mortgage approvals for home purchases in February were up by a huge 32%. So mortgage approvals, that's very good. We don't know what sorts of mortgages they were, but it's across the board, and that's very good. It's a more balanced market. There's more supply coming in. Zoopla's data shows more homes are coming onto the market, which gives buyers more choice, helps prevent gazumping, which is a problem from buying from overseas, because gazumping, because we're so far behind the actual action, often when we get our information in there, get our buys in there, it's too late, it's gone. Had that example today. I was trying to buy somewhere in Nottingham for a gentleman. By the time we got into it today, it had gone. So there's more stock coming onto the market, so that's giving more people freedom to take a bit more time to buy property and not having to rush into it. So people are making less mistakes, I believe, and I'm seeing that from what I see at the moment. Some excellent graphs here you can have a look at. What does Zoopla think is going to go on in the sales prediction? They believe that for 2024 we'll have an extra 100,000 sales compared to 2023, which is, obviously 10% extra, which is brilliant. So it does show the market is starting to pick up, and we got a much better sentiment. So for you as a purchaser or a potential purchaser, when people are being positive, markets go up. If people are frightened, they don't. So people are more positive now, even though we've got lots of problems around the world. This is a more positive thing in the UK. Now, there's a couple of things to bear in mind, and I was doing some research on this. As far as wage inflation, wage inflation at the moment is 6.4%, down 8.5. So wages have actually gone up by 30% in the last 6 years, according to Financial Times. 30% increase in wages. So if you look at, say, where London was 6 years ago, it was way overpriced. But as wage inflation has gone up, it has it's becoming to be more affordable. At the same time, if you look at actual inflation is running at over the last 5 years at 23.91%. So you might have had a 30% growth in your wages, but inflation's at 23.91. So really, it's not really made much difference. So wages haven't gone up that much in price, in value. But the point is that if you had a loan, your loan would have shrunk by 23.91%. And in fact, over 10 years, it would have shrunk by 32%. 10 years ago, if you bought something for £10, how much would it cost today? It'd cost £14.88. Bear in mind that inflation is eroding away debt. House prices may be going up, but they're going up in line with wages. So it's not getting any cheaper for people. The problem is that the cost of lending has gone up a lot compared to what it was 2 years ago when it was sub 2%. It's now on average about 5% to borrow. So that's doubled what people are having to pay into their mortgages. In some cases, it's gone up by 60%. So the real problem is affordability based on the cost of lending. But it's the new norm, and we have to just come to grips with that. It's a case of house prices have gone up, and they are starting to creep back up again in most of the city centres. We're starting to see it in London. A colleague of mine came up with a great quote the other day that commercial investments are coming back into London. The Americans were reversing back into London and buying commercials. And he said, when commercial goes, residential follows. That's a strong sign for London, which has been flat for the last 9 years potentially. So the point I'm trying to make is that we've got more positivity out there. It's no more expensive than it was 5-10 years ago because of wage inflation going up. That's kept in line with general inflation, so the house prices haven't really increased in price in real terms. They've just gone up in price in inflation adjusted terms. So house prices are just as competitive as they were before, in the right places to buy. The other point is, I think, that if you look at what does it mean to us, if you look back to 2000, okay, since 2024, from 2000 to 2024, house prices have gone up, and you'll never work this out, 239% in London and 210% across the general country. So you may say to yourself, well, what's happened to inflation? Have those house prices actually gone up? So is property a good investment? Well, inflation would have cost you £100,000 in March 2000. Today would cost you £183,000. So that is not 200% increase. So in real terms, house prices are a store of wealth, and they go up in price. Don't misjudge though, when you see these amazing figures, we've doubled our money, we've tripled our money over the last 20 years. It's got to be inflation adjusted and for the increased cost of living. And then the second point to look at on that is, again, I was talking to a gentleman today about, is stocks and shares better or bonds better than buying property? They're all very similar. You know, stocks and shares, I think, have done an average 7% plus. The S&P 500 has 7% plus over the last 10 years. What has property done? Something pretty similar. So having a diversified portfolio is important, but the point is, you can't gear a stock. If you do, you'll end up taking a bath because you're bound to get a margin call and losing your money. But you can gear a property. So you can borrow 70% against the property, someone else pays the mortgage off, inflation pays the mortgage off, that's great. A counter argument to that would be, well, if I borrow £250,000 to buy a £400,000 property, I'm actually going to be paying back about £600,000. That's true. So that's why it's so important to buy in an appreciative location. So buy somewhere that's going to go up in value, which is what we focus at APW, is trying to find areas that will go up in value, that will give you a strong rental income. And the two most important things when doing buy-to-let are good tenants and good agents. So good return, good rental income, ease of management, and tax planning to make sure you're not paying too much tax. Those are things we try and help with. It's a difficult recipe to get right. I was speaking to a gentleman today and he said, well, what can go wrong? Many things can go wrong. But if you hold property over the long term, 9 of the 10 things you worry about won't occur. And often it's not going to be all green lights before you set off. But if you waited for green lights before you set off for work every day or to take the kids to school, how long would it take to get there? You'd never get there. We're looking more positive in the UK. Interest rates are falling. There's a lack of demand, a lack of supply rather, and a huge demand. It's a buying opportunity, and that's what we say at APW. And if you do jump in, you won't regret it as long as you do your research. That's me for now. Thank you very much for listening. I do hope you found it useful. Overall snapshot of the UK market. It's turning, it's looking better, could be a buying opportunity. All depends on your personal situation. Do enjoy your week. Please like if you can, subscribe, and if you'd like more information, do get in touch. Thanks very much. Cheerio.